Fear is spiking, stocks are sliding. Let's uncover what is really happening with S&P 500 and Nasdaq 100. Hey, it's DK from DK Global Markets Insights. The S&P 500 and Nasdaq 100 have just dropped over 10% and 13% from their recent highs. Markets are shaky and everyone is asking, is this correction over? Stick with me as we dive into the charts with price action analysis to see if the bottom is in or if more pains on the way. We will also check the fear and greed index to decode what traders are feeling right now and pinpoint the support and resistance levels you need to watch this week. This is your edge in the US stock market. So subscribe and follow. Let's get started with the insights. Let us kick things off with fear and greed index. Right now it is sitting on 22, signaling extreme fear in the US stock markets. Just a week ago, it was reading 25, so sentiments hasn't budged much. We are still deep into the fear zone. That's the big clue. Whenever this index hits extreme fear, it often means that the markets are oversold, and that could set the stage for the bounce. But is it happening now? Let us find out. We are heading to the charts next to dig into the price action and uncover the most critical demand and supply zones. These levels will show us where S&P 500 and Nasdaq 100 might hold or break. So stick with me. Charts are up next. This is the weekly price chart of S&P 500 index, which finally closed in the last week at 5,580.94, and thus it had a bearish move of 1.53%. Look at the support area. We can draw trend lines in two different ways. One is this trend line. Price has taken support here, taken support here, taken support here. So this trend line is a very good support for S&P 500. However, we can draw another trend line. Price has taken support here, price has taken support here, and currently the price is trading quite in proximity of not only this trend line but EMA 55 as well, which normally holds good as a dynamic support, which it did earlier also at this particular point. Now in the last week, if you recall, we had discussed about the corrective wave and did the retracement analysis, and we expected that 38.2% retracement level falls at 5,750, from where the price may correct. And accordingly, exactly it has happened. It went to the supply zone, and it is being a derivative of the golden ratio. Price started correcting. Considering the support of EMA 55 and this particular area where the price has taken earlier support, 5,474 to 5,563 remains to be a good support area or demand zone for S&P 500. However, if this zone is taken out due to the excessive supply, then probably 5,300 is a zone where the price has earlier taken resistance, and here there was a gap down opening, and finally this particular level was respected. Now let us move to the daily price chart. During this correction, the price is now currently trading below SMA 200, SMA 144 and EMA 21, EMA 555 as well. The worry point is EMA 55 has crossed under SMA 144, but thankfully SMA 144 slope is still flat but not downward. Since it has come in the downtrend, so we need to have a confirmation through some kind of reversal chart pattern. What possibility may be there? Price may correct and test this bottom. So it may form the double bottom over here, and apex of the double bottom is around 5,780. So if it recovers after testing this bottom, which is falling within the demand area of 5,471 to 5,563 and bounces and gives a breakout of apex of this double bottom, then probably it may signal the trend reversal, because it will be a breakout of a reversal chart pattern. So next week, important levels to watch are 5,471 to 5,563 at support area, and the supply zone is 5,750, which is a 38.2% retracement level with respect to the corrective wave, and 5,780. Now let us move to the price chart of Nasdaq 100. This is the weekly price chart of Nasdaq 100 index. It closed at 19,281.4, and hence it was bearish by 2.39% on a week-on-week basis. So Nasdaq 100 has underperformed the broader market index S&P 500 in the last week. Here too we can draw two kinds of trend line, thus by determining the demand zone. One is this trend line, price has taken resistance, then it became the support over here. So this trend line is very, very important. Another trend line we can draw is price has taken support here, taken support here, and taken support here. So this is the trend line where currently the price is trading, and the price is quite in proximity of EMA 55. So the zone between these two trend line is a very good demand area for Nasdaq 100. Considering the prior impulsive wave, this particular candlestick pattern is a one white soldier candlestick pattern. The entire range of this candlestick pattern is very significant and an important demand area. So the major support, even if it comes to this zone, 18,600 is a very important support area. But before that, this is the demand area where we had earlier bullish pin bar kind of formation. 19,100 to 19,300 is the intermittent support area in Nasdaq 100. On upside move, if we do the retracement analysis of this corrective wave, 38.2% retracement level comes at 20,300, and in the last week, Nasdaq 100 made a high of 20,292, and from there it got rejected, which means the price got rejected from the supply area that we discussed in the last week. Now let us move to the daily price chart. So Nasdaq 100 in daily price chart, it indicates that it often goes during correction below SMA 144, but sooner the recovery takes place. It has done it here, it has done it here, and similar price action can be seen over here. Now this is a very important area of consolidation where currently it is trading. Since it came in the downtrending move during the formation of this corrective wave, so this was the first pullback which normally doesn't sustain, and that is why we have some kind of reversal chart pattern. So this correction is a welcome correction if the price respects this earlier bottom. So 19,100 to 19,300, if it gets respected in the next week and the price recovers and gives a breakout of this 20,300 level, which is nothing but 38.2% retracement level also with respect to the corrective wave. At the same time, it is the apex of the possible double bottom kind of chart pattern, which is a reversal chart pattern. Once it goes past 20,300 and takes out the supply area of 20,300 to 20,600, which has a confluence of SMA 144 and EMA 55, then probably trend reversal will take place and there will be upside momentum developing in Nasdaq 100 too. One more important thing to be observed is that during this correction, the volume is not very high. The volume is below the average volume. All right. The fear and greed index at 22 ties right into what we have seen on the charts. Both the S&P 500 and Nasdaq 100 are nearing strong support zones and could form a reversal chart patterns soon. The correction might be losing steam. What do you think? Drop your thoughts in the comments. Subscribe, follow for the next video.